Folks, all earnings are not the same, right? Something you've seen on this channel is occasionally I admit to being an accountant. I was a general ledger accountant at a publicly traded company for the first 5 years or so of my career. I sat in boardrooms where we were making general ledger, accrual, and accounting decisions that materially impacted earnings. So I have warned you, I've highlighted that, folks, you need to look and understand the three statements: balance sheet, income statement, and the all important and ever forgotten cash flow statement. It is so frustrating that most people do not understand that cash flow is the statement that is probably most important if you understand it. And the reason I want to bring this up is we've just had, I don't know, 98% of the S&P 500 report at the high level. Earnings are above expectations, earnings growth, all of this stuff. However, I have looked under the covers and there are big signs. And the All In podcast actually put out a chart from Bloomberg showing earnings and free cash flow. And the gap is widening. And you could do this legally. It is generally accepted accounting practices. You could have accruals, inventory builds, capital, right? You go spend $100 million on building something, but you only take so much of it now, and all legal. But folks, let me just say that the earnings quality of the last quarter sucked. So I wanted to talk to somebody on Wall Street, been there a decade or longer now, and see if I'm just wrong and bitter and off. So what do you think, Taylor?
You're not wrong. You're not wrong. And I even think, no, plain bluntly, you're not wrong at all. And I even think some of the top line stuff, before you get into the details, you look at it and go, it's not good. I didn't like the earnings reports that we saw at all, but yet the market rallied on it. So we can certainly give some, I can give some examples and some context as to what's going on. But like, I saw earnings reports and yes, they beat expectations, but expectations had been obliterated and moved downwards. Earnings reports were negative. Like, so if you look at the NASDAQ 100, I only know the number as of when 86% of it reported. A little bit more than that has reported since then.
Sure.
The fourth quarter earnings reports versus the year before were negative 15.5%. 15.5%. The NASDAQ's up like 12% year to date. On that news, the NASDAQ's up 12%. I don't know.
Talk about retail buying the headline. Yeah.
What simultaneously is happening? So earnings are coming in negative 15.5%, like I said. And yes, or the NASDAQ's up about 12%. These are the tech heavy index. Simultaneously, inflation reports hit for January that show inflation's much stickier than what we had previously anticipated. This is the most inflation sensitive sector of the market. So that's a double whammy. Earnings suck.
You would think
inflation's picking up, which is not good for tech. And yet you get this massive rally. I look at this and say, maybe a dead cat bounce, guys. Watch out.
Yeah. Well, let's give a real example. You've gone through a lot more earnings statements than I have. I think you have an example of one and can highlight some probably eye-opening facts for folks. So the floor is yours.
Yeah, I'll just show the very top line stuff. So Salesforce reported a little over a week ago now. On the day they reported, post-market, they were up 14%, 14%. So they obviously had really good earnings.
Somebody liked something.
Their revenue was down for the quarter, negative 98%. Or I'm sorry, negative 98 billion versus the quarter a year ago. So
year on year, down 98 billion.
98 billion year on year. And the market said, that's awesome. You're up 14%. Why? Because they did the exact damn thing that Meta or Facebook did, where they reported shit earnings, but they said, you know what? We're going to act as adults now and be conscious of how we're spending our money. We're going to lay people off.
We're going to be efficient.
Yeah, exactly. So Salesforce, and we discussed this prior, and like we're kind of laughing about it. Salesforce is also in a little bit of PR hot water, if you will, because they laid off 8,000 employees and simultaneously signed a contract with Matthew McConaughey to be their PR person for $10 million. So it's like, guys, I guess we're controlled spending somewhere, but on the other hand, are we really? I don't know.
Yeah. So, one of the things, again, as an accountant, and again, I sat in boardrooms with like 12 to 20 people, and we were making business decisions, right? So there are generally accepted accounting principles where you can make business decisions and you could push off expenses, which makes earnings look better. You could
Yep.
bring stuff forward. You can bring, dude, you can bring revenue forward. Let's just
Please,
take an example of a car company. Someone we might know. You sell a car, let's say you're selling cars for the last 3 years for 50 grand.
Yep.
Inside the bill of materials, you have a line item that says, I don't know, full self-driving, 5 grand, but it's in beta. So generally accepted accounting principles, because you can only accept revenue for stuff that's out, you can only recognize 45 million or 45 grand of every car sold. And then it's 5,000 just builds over time. Every car.
Yep. Yep. Yep.
And then you get into a bad quarter, you push some button on some software, it shoots out to the world. Suddenly it's live for everyone. Guess what happens? You get this one-time
I don't know what
windfall.
company you're talking about. I don't.
Oh, I have
really
no
don't.
idea. No idea. This one-time windfall of every car sold for the last 3 years times 5 shows up as top-line revenue. Boom.
You know, it's an interesting one on that company, and not to beat him up or whatever, but Warren Buffett being a big owner of, I believe it's called BDC.
BD, something like that. Chinese.
Yeah. It's
BIO, BDC, whatever.
Something like that. It's 3 letters that references a Chinese electric car maker, and they are actually increasing prices right now. So they're seeing margins widen, and their
BYD,
BYD,
I think it is.
BYD, that's what it is. Price pressure higher, whereas Tesla's claiming on the other end that they have to cut because the market demand's not there. And so again, I'm not necessarily beating them up, but at the same time, you're saying, hey, demand's not there. It is there for the right car at the right purchase price, because you're actually able to see price increases at a BYD.
Yeah, but again, these are just things that you could do in generally accepted accounting principles. Is again, let's just assume you're selling more than you expect, and gap. You don't. Again, I was in the rooms, right? You're selling more cars or computers or phones or whatever widget it is, and you don't want to have expectations go up. So you just create some line item that's not in public. You take some sliver, you create an accrual, on your balance sheet that just sits there, and it's a freaking rainy day fund.
Yep.
So whenever you have a bad quarter, you go, oh, you know what? We just released that to the public. Let me throw some of that balance sheet to the income statement.
And you know what? Warren Buffett actually talked about that in this year's letter as well. He talked about it being criminal.
Oh yeah, it's good. Let's go to banks. Something I told people right when the pandemic happened is I said, watch. Banks are going to reserve for bad debt, and I suspect they will over reserve.
Yep.
Again, generally accepted principle. They're going to go into a horrible environment, tell scary stories. They're going to take billions and billions and billions and billions and billions of dollars in reserves for bad debt. Sometime in the future, they will start rolling that off because they will absolutely over reserve.
And you know what? You know why they were able to do that is because simultaneously, as they took this money off their balance sheet and put it over here for that rainy day fund, they were also getting the injection of all the stimulus money that were coming in via people to fill that gap. And all of a sudden, it looks like they haven't missed a beat because that stimulus money.
And they have this over here.
And they have it over. And mind you, net interest margins at that point were really wide because they were paying 0.00001% on savings account deposits, and they were lending it out on the other end.
Yeah. So again, as I called for right when it happened, about 18 months later, you saw JP Morgan and Goldman Sachs and all of them. Oh, we didn't need to use all of that. Here's $2 billion back, and it all shows up, as income. So it's wild to think about. So again, folks, these are generally accepted accounting principles. I keep telling you, as an accountant, I sat in the rooms, and you can make legal adjustments that impact the income statement and the balance sheet. Honest. However, the cash flow statement doesn't lie.
Yep.
The cash flow statement doesn't lie. So talk about how important the cash flow statement is. Because again, that is the oxygen or the blood or whatever of a business.
Yeah, that's just taking into account what your actual revenue is coming in and what's hitting the bottom line on a quarterly basis. It's taking out all the noise, stripping out all the ability to manipulate whatever it is, the building that you're depreciating over 3 years versus 5 years, whatever it is. It is the cash, the hard dollar amount that you're bringing in. And again, that's the revenue. Here's the expense. That's what hits the bottom line. Boom. What happened to the overall cash position of the company based on that flow?
Would it be fair to say that you could show positive income? You could have a very large net worth and your business can still go bankrupt because your cash flow is negative?
Yeah, no doubt. No doubt whatsoever. That's exactly what you're referencing.
Yeah. This is why it's important, folks. There are companies today that are cash flow negative, that have billion-dollar valuations, that if they can't successfully raise more debt, will die.
And that market's squeezed right now because you had, the Fed moving interest rates up causes that cost of capital to get more expensive on these companies, and it's straining. Look at the VC market. The VC market's basically frozen right now. No one is committing capital into these companies that are telling a great story, because that's exactly what's happening. That was what was selling in 2021. That was the crypto story of 2021. Anything with a crypto tag on it got VC money that got absolutely pumped behind it. And how bad were the accounting systems there? Don't look any further than FTX. Like, this is exactly what you're talking about, Michael.
Yeah.
Like, in a microcosm within the crypto space.
Yeah. This is why being an accountant, again, it was probably the least fun of my career, but the most eye-opening. I remember sitting in these rooms as the youngster and seeing these executives talk about decisions that would materially impact earnings that frankly seemed like a game.
And you sat back and were like, I haven't been in this business that long, but this isn't what I expected to see.
Yeah. I did, I don't know what I was, 24, 25 after my MBA. I was coming out going, wow, these guys are dirty. It's like, wow. Yeah, because I remember one time example, the raw number, because again, we would do, so the quarter would close. We had 4 business days to get the top-down review done. On the 5th day, usually in the afternoon, we would go sit in this room, and I was a fly on the wall just listening, right? I don't know squat, but I know the system, so I do the updates, right? And we came there and we were like, we lost 7 cents a share. I don't remember what the dollar, but I remember 7 cents.
I bet you didn't report that.
No, we did not.
They didn't report that is what I mean.
No, they didn't report that. So they said that's unacceptable. We told the street, I don't know, 2 weeks ago that we were going to report 11 cents positive. So for the next 4 or 5 hours, the 15 people in that room went through the entire balance sheet, income statement, and said, what can we modify?
Manipulate.
And sure enough, we reported 12 cents. We beat.
You outperformed their outperformance.
Yeah, we beat. I was like, and again, the other thing I want to say, because these are generally accepted counselors, these games, they only work for a short time.
Correct.
That is one thing that I don't, again, the reason it all washes out is because these assumptions eventually come back, right? What they assumed to go from -7 to 12 cents, they eventually had to pay back. So either A, they told the street in the future things would be worse, right? So lower the bar, or they just got, right? So,
and that's what happens is simultaneously, if a lot of this is taking place not just in one company, across industries, then that's where you can get all of a sudden bad report, gap downwards in the market, because systematically you get that waterfall of, okay, we are now coming to the realization that we can't continue to kick this can down the road and fill gaps in places by manipulating the balance sheet. The numbers just aren't there. And when they aren't there and it becomes evident, at some point you got to swallow the pill. And if too many companies swallow the pill at the same time, that's when you can get that gap downwards.
Well, that's why recessions get really bad. Because again, I was in this room, I was there, I don't know, 3 years or so. And I remember that -7 to 12, I think it was like 9 months later, the economy was different. And I remember being in that same room, and they basically said, now it's time to clean the books. They said that phrase. Yikes. Because the rest of the market was already tanking. So like, we're going to take it all now. I call
just join them.
And people have heard me say this. It's the kitchen sink quarter.
Yep.
So they go back through every manipulation. They clean the books. They take all the pain in one quarter. Why? So they reset lower and the game continues.
Yep. And at the same time, when you look at it, the performance of a CEO is relative to their peers. So if the peers are moving down simultaneously, then you can take that pill and say, hey, listen, I'm in the
You
same
have to
business
take
these
it
guys are.
eventually. Might as well be in a recession.
Yep, exactly.
Yeah. So you talk about a lot of this stuff. I learn stuff on your socials all the time. Where can people follow you?
Yep, we're on both TikTok and Instagram at Life Goal Investments. We do lives on both of them. So see us on both of them. You'll catch us whenever we're on.
Yep. If you want to see a guy walking around the New York Stock Exchange, follow this guy. Thanks, buddy.
I'm your guy.